Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. This content is brought to you by Uphold, which is a great platform that allows you to buy, sell, trade, and earn cryptocurrencies. You can also trade precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. I've used this platform since 2017, so I can vouch for it. But as with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more, please visit the link in the description. All right, my friends, it was a big day for the crypto market as well as all markets because we had the FOMC meeting. The Fed came out, they raised rates by 25 basis points, which a lot of people were expecting, and the market started rallying. Right now, Bitcoin is at $23,708. Ethereum is at $1,639. BNB is at $317. XRP just over 41 cents. So we're seeing some green here. So what does this all mean, guys? Well, let's talk a bit about it. So the Fed is ramping down, as we've been talking about. We're not out of the woods yet. They will continue to raise rates. But as we've been talking about, we're on the other side of the hill. Their foot is on the brake right now. They're slowing down. So the rate hikes are not as high as they were before, 75 basis points, 50 basis points. They're ramping down 25, and eventually they will pause this year. And you may say, well, how do you know that, Tony? Well, there's a couple of things here. We have to look at this markets and the scenario from a holistic perspective. We have the presidential campaign next year, right? 2024, we got Democrats and Republicans, and these folks will be running for president, right? And Joe Biden, obviously the incumbent, will be running for a re-election. Do you think he's going to go into 2024 with the markets in a recession and things looking very bad? No. Things will start to turn as we proceed later into the year because there has to be that positive effect. There has to be that feeling of, oh, things are okay, the economy is good, the narratives have to be there. The Fed is a part of that. Right now, they're fighting inflation, but if they continue to raise rates at a fast pace and a higher, they take their rates very high, what's going to happen? Wealth destruction. They can destroy a bit amount of wealth, for over a period of time. So far, it hasn't been that bad. Real estate prices are down, stock prices are down, crypto is down, and so forth. But if it continues, you will have people rioting in the streets. Just think about it, right? Just think about simple economics, politics, optics, and how people feel. That's what's at play here. And if you don't think presidents influence the Fed, then your head is buried in the sand. Both Democrats and Republicans use the Fed as a tool, as a weapon sometimes. So don't get me wrong, the Fed is doing its work here after they printed all the money and that caused inflation. They're now trying to bring it down. I get it, but they can't go so aggressive on rates where they kill markets, where they destroy wealth to such a level that people, are going to be wiped out. They're not going to do that because it's all going to fall apart if they do. So this is how I look at markets and how I'm thinking about, what is it the Fed may do and so on and so forth. But what we know is that the stock market and crypto is correlated. The stock market saw a bounce off of the 25 basis points hike today because it was as anticipated, the ramp down. Also, Jerome Powell's tone and his language was not hawkish. It was on the dovish side. Don't get me wrong. He didn't say, oh, we're pausing next week and all that, but it wasn't as aggressive, right? So I will put that in the dovish category. So Bitcoin saw a bounce. If you look at the hour chart here on that news, so did the stock market. And Bitcoin on the macro continues to look like it's going to do that retracement back to $40,000, $50,000. We'll see what that is. And that could happen by, March, April, May, within that range. It's hard to tell, right? We just have to take it week by week to see how Bitcoin moves, what support levels it builds. So the other factor is the DXY continues to crash. It continues to go downwards. What have we seen historically? When the DXY, the US dollar currency, is going downwards, assets are going up, and vice versa, right? So you're seeing some facts here of how things are moving. So we got the 25 basis points hike. And then here's another fact, guys. Powell was asked about the debt ceiling. We know Democrats and Republicans like to use the debt ceiling and fight each other and create all types of narratives and confusion for people. But we all know, guys, the system we're in, they have to keep printing money. They have to keep it going. This is why I'm saying they're not going to destroy wealth, because it's not just going to be regular people who are going to complain, but the wealthy who have lots of money in real estate, stocks, and crypto, and so forth. So here's what Powell said on the debt ceiling. There is only one way forward: for Congress to raise the debt ceiling so government can pay all obligations when due. Any deviation from that would be highly risky. In terms of our relationship with the Treasury, we are their fiscal agent, aka fire up the money printer, you bastards. We're about to print more dollars. So that's what's coming. I hope you guys see it. I hope you understand what's happening here. It's not just about the charts. Yes, the charts sometimes align with the narratives, but you got to look at the bigger picture. How much wealth can they destroy? And the system is based on money printing. And there's a presidential election year next year. So all these things, once again, we're headed to the end of the light at the end of the tunnel here, the ramp down, the eventual cutting of rates and money printing again, where asset prices will explode. And this is, of course, aligning with Bitcoin cycles, because next year is the Bitcoin halving. Some people will say, hey, this rally that we're seeing is going to lead us to all-time highs this year. I don't believe that at all, because that's not how it has played out historically. You look at the charts, you look at the history, that's not how it happens. It's after the halving takes place, then usually a year after is when you see new all-time highs. And I've been pointing you guys to the Bitcoin rally that took place in 2019 after the 2018 bear market. I think that's what we're going to see this year. So I'm prepared to take profits on Bitcoin and altcoins as they move up. But once again, not to new all-time highs. If they do somehow go to new all-time highs, I'll be the first to say, yeah, I was completely wrong. And I'm happy I'm wrong, because I'm here to make money. So if it goes higher, I'll be cashing out, right, and taking profits. But I want to make sure that I'm looking at the data and the information. And if anything changes, we will update our thesis accordingly. But right now, I'm looking at how Bitcoin has played out historically. So once again, we are not out of the woods yet, right? But we are on the path to green, to the Fed ramping down, to the end of this tightening and back to quantitative easing and so forth, right? That's where we're headed. And the markets, as you all know, will start pricing these things in ahead of time. So you're going to see rallies and so on and so forth. Now, something that people were really worried about today is that yesterday, Michael Burry tweeted out sell. He just tweeted out the word sell. And we know he's a big time shorter. Jim Cramer was also saying, oh, we're in a bull market, time to buy the dip or something, right? He was tweeting that. So you want to do the inverse of Jim Cramer. So people were worried, even myself. I'm like, oh man, perfect storm. Burry says sell. Jim Cramer saying buy the dip. And right. But funny enough, here's something that just happened. Burry just deleted his Twitter account again after tweeting out sell yesterday. And, I tweeted out the following in regards to that. And I said it before, bulls and bears make money, but pigs get slaughtered. And many bears are becoming pigs. They're getting greedy, and they've been shorting all of last year. And I don't have a problem with that. It's the bear market. You short, you make your money. But they get so greedy that, and Bitcoin must go to 10. Bitcoin must go to 8. And I'm not saying that's not possible, but they get greedy where they're loaded up on leverage and they want to push it down. It's like, bro, it can't go further down, right? There has to be a bottom at some point. So they get greedy and they become pigs. And as the saying, once again, bulls make money, bears make money, but pigs get slaughtered. Now, a lot of bears are becoming pigs and they will get slaughtered. So you're going to see a lot of more short liquidations, my friends. And I don't know what's going on with Burry. I don't know if he was indeed shorting or not, but he did tweet the other day a fractal on a chart from, I think it was 2000, as the dot-com bubble had popped and the markets were crashing and there was a nice rally, right? And he tweeted out, and he said maybe, and then yesterday he tweeted out sell. So look, Burry's not right all the time. Obviously, he was right big time with the mortgage and securities industry and all that, and he shorted the hell out of it. He made a lot of money, became famous, but he's not some like Nostradamus guy with a crystal ball where he gets everything right. So he might be wrong here. Now, I want to make sure I'm clear about something. If we look at the Bitcoin hourly chart here, Bitcoin can move up to 25,000 and then roll over and retest the lows of like $18,000, $17,000 before moving back up. Please don't forget that, guys. I want to make sure that's clear. Now, bears will say, see, we're going down to 10. We're going down to whatever, right? Lower lows. Don't fall for that trap, because Bitcoin made some strong moves here. It's going to 25. Guess what? It can't just keep going up in a straight line. It has to pull back and then, work its way up. Just go back and look at the Bitcoin charts, maybe from a weekly, monthly standpoint. Nothing goes up in a straight line. You see strong moves, pullbacks, build support, strong moves, pull back, build support levels. It has happened before. And so just be prepared for these different scenarios. Sometimes people just want to hear the bullish and they only think only bullish things will happen. No, bearish things can happen even in a bull market, right? In a move upwards, because this market is volatile. But the point is that from the macro, the momentum is moving upwards. That does not mean, once again, we can have pullbacks along the way. So please understand that and understand the nuance of these moves. But guys, altogether, good news. Good news. Once again, Fed 25 basis points. He could have came out and said, Jerome Powell could have said 50 basis points for you fools, 75 basis points for you, right? And the markets would have been shocked and hurt by that for sure. But once again, all the narratives, politics, economic, markets, wealth, all these things, you got to put it all together, my friends, to understand what's happening here. So good news altogether. All right, let's move ahead. After FTX's crash, Binance realized it needed to engage with DC. A handful of others are choosing to do the same. So I've been talking to some folks in DC, some with the Blockchain Association, and they're saying, man, this guy, Sam Bankman-Fried, really screwed things up. And, he destroyed a lot of the industry's credibility because of his dumbass fraud. So they have to do a lot of work to rebuild this, and it really sucks. It sets us back, but what are we going to do? We got to keep working. We got to try to engage with the regulators and the politicians. So we got a report here from Blockworks that the lobbyists from different companies are starting to do that, and they're starting to go out and talk to these folks to try to rebuild the credibility. So here's the headline: Mike Pence's nephew among Binance's new lobbyists. Riot Platforms, A16Z, Tether, and Bakkt also add lobbyists to help deal with the regulatory aftermath of an eventful 2022. So this is good news, but once again, it's just, I think we're all still feeling the pain and the destruction left in the wake of FTX and Sam Bankman-Fried's idiocy. So Binance has registered 3 new lobbyists from legal counsel firm Ice Miller, according to a filing, in a move spurred in part by the fall of one of the crypto exchange's biggest rivals. Following the arrest of FTX's CEO, Binance.com received several inquiries from congressional offices seeking our perspective, a spokesperson told Blockworks in an email, as Binance.com had never previously engaged in Washington, D.C. We sought government affairs consultants that understood both crypto and our CEO's role in the industry. Ice Miller, which had previously supported Binance US, was a natural option, the representative added. The exchange's U.S. arm first hired lobbyists from the firm in 2021, Politico reported. The latest lobbyist additions, which went into effect Tuesday, include the nephew of former U.S. Vice President Mike Pence. John Pence, now Ice Miller's director of public affairs, was a senior advisor for the Trump-Pence presidential campaign from 2016 to 2020. He helps with the issue monitoring and engagement at the federal level for clients. According to the ICE Miller's website, Pence is not licensed to practice law in any state and does not provide legal services. So, guys, this is good. There's some other folks they mentioned here, but I'm not going to read through all of it. But the TLDR is that these crypto companies are ramping up their lobbying to try to rebuild the credibility of the market. So this is good news. We got to do it, right? There's no choice here. We got to win back some people who are, who were maybe on the fence, and now they're like, yeah, I'm not touching crypto. I'm not talking about it, just because of this idiot Sam Bankman-Fried. Now, we got some very bullish news as it relates to the token economy and blockchain. So I've often talked about the token economy and how everything will run on blockchains in the future. You're going to have tokenizations of securities and commodities and assets and so forth, right? And contracts, everything will be on the blockchain, guys. That's the future. That's the direction we are headed to globally, where you're going to have 24/7 trading of markets, fractional tokenization of different assets and things like that. So here we got news that the U.S. Air Force pumps $30 million into blockchain for supply chains. The U.S. Air Force is still really into blockchain as a way to revamp supply chain management, and it's betting on Indiana startup SIMBA, SIMBA. So this respective blockchain, it doesn't have a token, so it seems to be more of a private blockchain, and there are going to be blockchains out there like that which are private that don't have tokens, and they're going to be kind of like centralized blockchains in a way, kind of like JP Morgan's JPM coin, and they had quorum and so forth, where it was just within their network. So they're not public blockchains where it's distributed globally and all of that, right? That's going to be part of it, but there will be interoperability between these different blockchains. But as you can imagine, certain folks like the army and the CIA and the government, they're going to want some level of privacy. I think that makes sense, right? That's common sense right there. So we're going to see different blockchains, but this is an example of how every sector, government, you name it, every industry is going to adopt blockchain in different ways. So once again, the U.S. Air Force has for a while experimented with blockchain solutions to manage cash flow and streamline data management operations. It was already collaborating with blockchain as a service provider SIMBA Chain to develop a blockchain-based system for certain functions, including supply chain, quality, and management. This week, the Air Force selected SIMBA for a $30 million strategic technology initiative, representing a significant bump to its budget for blockchain initiatives. The investment will go to the development of blockchain-powered applications in the support of supply chain management by the Office of the Undersecretary of Defense for Research and Engineering, the USAF, U.S. Navy, U.S. Army, and the Defense Logistics Agency. Here's a quote: "Our new project for the USAF will pave the way to more efficient and comprehensive management of assets within the Department of Defense supply chain." Stacy Belej Amadeo, boy, I butchered her name, Vice President of Government Operations at SIMBA, said in a statement. In 2021, SIMBA Chain secured $25 million in a Series A funding round led by Valley Capital Partners. Other individual investors affiliated with tech giants Amazon, Apple, Meta, SpaceX, and Microsoft participated in the round, the firm said at the time. So let me give you some more details here. SIMBA previously secured 7 contracts with the U.S. Air Force, the most recent being tokenization of its supply chain budget to keep checks on potential risks and imbalances. The first contract was executed in 2019. SIMBA has also worked with other divisions of the Department of Defense, including a $9.5 million U.S. Navy contract in 2020 related to secure communications. Guys, you see what's happening here? Do I even need to say more, right? Governments, institutions, companies, they both large and small will be using blockchain. And the future of our commerce and these things will be on smart contracts and, once again, tokenization. That's what's coming. I hope you're studying up on this, whether you're investing or you're looking to work in this industry or you're looking to be an entrepreneur and start your own business. This is the future. And you can see here the government is investing money into getting these solutions built for them. Pretty incredible. Makes me very bullish when I see things like this, even though there's no token for SIMBA. I don't hold. There's no, obviously no token, but the point is that the government will use certain types of public blockchains, and yes, they'll have their private ones for their own internal things, things they don't want information out there for. But they're going to use different blockchains out there, and some of which the tokens you guys hold, right? We've often talked about Algorand, Ethereum, the XRP ledger, and so forth. All these things will be involved and used by different governments around the world. Some of them, of course, we know the governments are tokenizing their fiat on some of these blockchains. So CBDCs, of course. So exciting times, my friends. Let me know what you all think about this news with the Fed and how the markets are reacting. Once again, we can move to Bitcoin could go to 25, roll over, test those lows again, the 18, 17,000 before working its way up. But, we're on the path, guys. We're on the path to green. We're on the path, and Bitcoin halving is next year. Just go back and look at the charts, guys. Go look and see how the markets have moved, and that will tell you the story. It's not guaranteed to play out that way, but at least we're working on a basis, a level of facts, not dreams and emotions and all these things, but facts. What has happened historically, and also we've talked about, once again, the macroeconomic environment, narratives, presidential election, all of these things. Let me know what you think, and I'll talk to you all later.